Hi guys, so welcome to this video. This will be a short one. So we're going to talk about displacement, right? Very important strategy or important concept, right? It's not a strategy on its own. It's something that a lot of us tend to ignore, right? And then we get clapped, right? Now let's talk about displacement, right? So displacement is one of the simplest things in the financial market that helps to identify what the market is doing, right? And then take advantage of this very simple displacement, right? One of the major reasons why a lot of us get stopped out is because we're trying to trade a market that has not given a clear displacement, right? So one of the issues we have is that the market is in some kind of range, and we're trying to trade this kind of range. The market is something like this, being very choppy, right? And then so this is the reason why a lot of us get stopped out, right? You can see clearly the market is in some kind of range, maybe on the daily time frame or in the weekly or on the 1 hour, and you're still trying to trade this kind of thing, right? This is what we call a consolidation, right? And as I've always told you guys, especially those of you in my paid community, when the market is consolidating or it's in a kind of range, the best thing to do is to stay out of the market, right? Because you can't tell when the market is going to turn, right? The market can decide to, let's assume if you want to catch the low, you can't tell when the market is going to take out this low. It's just very difficult to trade it. That is the reason why so many people actually lose their money. You have to understand that when the market is in a consolidation, it's called a build up, right? The market is trying to get the retail traders to act or to do something, right? This phase of the market is called a build up. Yeah, they're building up positions, they're building up sentiments, they're building up anticipation of the traders to get involved in the market, the impatient traders and the retail traders, right? So these kind of markets are the kind of markets you should avoid. So when you want to take a trade, you have to look out for what a displacement. So what's a displacement? A displacement simply means when the market clearly shows you where it's going. Maybe market takes a liquidity to the upside and then those breaks downwards. Now, this leg down is what refers as displacement. So the displacement can be seen as a one-sided movement, right? Just a one-sided movement where the market takes out structural lows and creates some kind of imbalances. So there are three things that makes a displacement valid. Number one, you want to see what markets take out lows or highs. So once the market take out lows or highs, very clearly, so once the market clearly take out a low or a high, want to see some untapped zones not some untapped zones. I don't want to see some kind of imbalance. Right, this is what you want to see to show this is what a very clear displacement. Once the market will take out a low, like very clearly, once the market creates some kind of untapped zone, like an untapped supply demand zone, an untapped order block, an untapped breaker block, an untapped order flow. So you want to see that in place. And then the final thing that you want to see in the market was create some form of imbalance, right? It's very important to see all these three things in the chart before you can classify this as what your displacement leg. Right. So now, when the market has created a displacement leg, then now you can look up for trade opportunities. Right. It's very important to see all these three things. Right. So when the market take out a low, all right, and a high. When the market takes out a low or a high, it creates what we call a well-defined range. So when the market does that, what do? You define your range by taking your tool, marking the high, and then what do? Is you mark the low. So now this man becomes your range, your trading range, right? So that's what it gives a range. And then what do next? You look out for this discount of premium area. So simply look at your Fibonacci tool and measure the 50%. So now if you're bearish, you're waiting for the market to retrace back to the 50% to this premium area before you take a sell down. Right? So you're looking for a sell anywhere, maybe anything you see inside the on top zone and imbalance, anything above what the 50% and above, right? That's where you're looking for your sells, right? And then vice versa for a buy. So the market displays to the upside. What do? You take out, you define your range, and then what? You take out your fib tool or your guide box and you measure what 50%. Now, let me say something. Now, this displacement doesn't always happen very linear. What do I mean? Let's take this back a bit. So you can understand also. Let's take this back so you can understand what I'm saying. Look at Richard very soon. So let's take this back a bit. Right. So this payment can also look like this. Market can do something like this, can something like this. With maybe push by them, drop. This is still a displacement, right? So how should you mark a displacement in this scenario? Where the market give a little pullback before dropping lower. It's still the same thing. You take out this, you're not looking at this because you're looking at this as one leg, right? You're not looking at every single pullback. So displacement is one, and the market displaced and then gives you at least a 50% return. So this return was not up to 50%. So you're not looking at that as a retracement. So the displacement leg is still one because there was no 50% return. So now you now simply mark here as your low, that is your high. So what do? You wait for price to come back into the 50% of the range and then give you your setup. You're accounting for lower time frame confirmations inside that what area, right? So let's go to the charts quickly to see if we can spot anything of interest, right? Go to the charts now. All right, so now we're in the charts. All right, now you can agree with me that somewhere around there, this market was consolidating. Just watch this. Watch this. Somewhere at this point here, market was in a kind of range. Right? You can see this range here. Right? You can see the market was in a kind of range here. Right? While the market was building up buys and sell orders. So you can see a very clear range here. What happened is the market finally was displaced to the downside, right? So the market displaced to the downside, taking out all these lows. So you see all these lows are taken out. See this low taken out. All this is what we call a displacement. So now watch very carefully. Now we had the range. What happened? Market was give very clear displacement to the downside, right? It's gonna also be to the upside, right? So the market give very clear displacement to the downside, taking out all these lows. What did he leave? Did he leave it even balance? You can see this imbalance here. You can see this imbalance here. We had this on top zone here, right? So you can see this was on top zone. And this last, look at this push up. This last push up was on top. Look at that push up there. So watch that area. So watch, can you see this last down push? This was on top zone. So what happened is markets came back into that area. What do what? See the drop off, right? Very nice drop off, right? What we call it, that's how we define our range. We use a displacement to know where to be trading towards, right? It's very, very easy to do, right? The market still came back again, so this other back and then hold us, see dropped off again, right? So let's look at the daily charts of another pair. All right, so let's look at another one. So what happened there? Watch this. If you look at this market very carefully, you can agree with me that this chart was actually in a range, right? You can see market inside a box, like a box movement. So the market was ranging between this high and this low. You can see the range between this top and the bottom. So what happened is the market finally gave a displacement, yes. So market finally was it swept the to the downside. The finally was displaced upwards, right? This was what we call a displacement. Market took a liquidity and then was displaced to the upside, right? So what happened is market came back. They come to 50%. So let's measure it now. Let's measure. So for this example, I'm taking the body, right? I don't want to use the wick. I'm using the body of the candle. Here's the body of the candle, right? Let's measure if it came to 50% because whenever you see a very long wick, just use the body of the candle because those wicks are usually caused by the news or manipulation, right? So just simply use the body of the candle, right? So the body of this candle. So market actually came to 50% of this. What happened? Kind of explosive move to the upside, right? That is how you define it. That's how you create your trade opportunities. You simply wait for the market to take out to finish consolidating. When it's done consolidating, you identify the most recent breakouts, right? The market broke to the upside, right? It didn't break to the downside. The market didn't break to the downside. It broke to the upside, and then you market. The reason why I'm using the body is because this week is long. Whenever I say market create a very long week, use the body of the candle to measure it. So not use the body because that week is usually what manipulation week that's caused by the news, right? So remember, the market gives a very long week. You use the body of the candle to define your range, right? It's very, very important that you understand that. So that is simply how to define your range and to form your bias, right? Let's look at one last example. I'm not here to teach lower time frame entry. I'm showing you guys how to read the markets from the higher time. This is Bitcoin, right? Let's look at Bitcoin to see if Bitcoin gave something of interest, right? All right, so this Bitcoin now. So what happened there? All right, so looking at Bitcoin, we don't really need any profit to tell us that there was actually what a very clear bullish range. Let me just take off this drawing. Let's look at this drawing. So you can see what I'm talking about. So watch this. Somewhere around there, we can agree that Bitcoin was kind of consolidating. You can see the market was in a kind of range. Somewhere around there, you can see Bitcoin was in a kind of range, right? What do you see here? Bitcoin was kind of ranging. We saw around a lot of range here. Okay, Bitcoin was also ranging around this area. What happened? Market was went down, took a liquidity, and it was displaced to the upside, right? So a very clear bullish displacement here. So watch very carefully. So if you take out the FIB 2 from here, from this displacement low to this high, so our price actually came to what 50%, right? So markets came to a 50% area. So we're going to get 50%. Right. So that market actually came to what 50% of this. Swap this liquidity, hit this imbalance, and then what? Rally or higher. So we had a second displacement, another displacement on the downside. You can see another one, very clear move, another displacement. So the same thing, looking at two, draw, I think on the body now because of that week, that long week. So I use the body to measure it. So this is the body, body to body. So you can see 50% and then what's rally higher. Right, that's how you measure it, right? So now this displacement is used on whatever time frame you trade. So for the higher time frame, you use displacements to identify the current market movement, where the market will likely go. Is it going up or down? Use the last displacement to identify that. Look at another displacement here, very clear displacement. Another one, market still get another displacement. So if you had watched this, you draw your FIB 2 again from that low. Markets came very deep in this time around. They came very deep. So suddenly this face to the upside. Market took out this high, made some imbalance. Markets came out to this was this daily order block, right there. This daily order block here. This last down candle was rather higher again, right? So you can see that Bitcoin has given what another displacement. So that's the Bitcoin is currently very bullish. You can see okay, let's draw from this swing low. Right? You can say, okay, if one at the trade Bitcoin now from a very proper standpoint, because since okay, this is our swing low and line our swingers. So you can wait for Bitcoin to drop at least 50% and give us a like, confirmation of what to take our trade. Right? That's simply how to catch those impulsive moves. It's very easy. Use the displacement, the most recent displacement to catch it. Right now, for the lower time frame, it's still the same thing. So if the market comes to if you want to take an entry, maybe you're looking for an entry, market comes to your PUI, maybe it's your PUI now, the point of interest. If you want to join our paid mentorship, you want to use the link in the description. I go into more details of all these things with real examples, and I give you guys a better approach to trading, because YouTube cannot contain everything, because we cannot be teaching everything in one video. But in the paid community, we are going to give you a series of materials, series of trainings to help you understand this concept properly. You cannot understand this in just one video. You need to come and join us in the paid group so I can teach you how, give you the step-by-step knowledge. And our mentorship is actually for 1 year. So we want to mentor you for 1 year, teach you very well, ground you up for 1 year, and then you can be very good to go on your own. All right. So now you have your consolidation here. You have your PY now. So lower time frame markets come to maybe your other block here. What do? You still wait for the same thing. You really want clear displacement. Right? So it could look like this. The market can now come back to what to tap you in and then what run higher. So now you can look like this. Market can create a kind of fake low and then come back to your original. You might see another block inside that lower time frame, maybe a lower time frame other block inside a higher time frame other block. This is what we call a lower time frame entry. Market comes to the original higher time frame other block, create a displacement at the lower time frame. Lower time frame could be 1 minute, could be 5 minutes, could be 15 minutes, it could be 30 minutes, it could be 1 hour, right? Market create a displacement at the 1 hour, comes back to your other block, and then that's your entry. So you can use displacements for higher time frame point of interest and lower time frame entries. Just make sure that the market is pushing strongly in your intended direction. That is simply how we trade displacement. It's very easy strategy. with this, don't even to learn anything more. Just using this for your opportunities, right? So if you like the channel pay mentorship for more, use the link in the description. If you want to watch more, get more of our videos, do want to like this video, subscribe, and I will see you guys in the next video. Have a wonderful day. Cheers and God bless.